and welcome. It's Mary Ellen McGonagle with your Friday afternoon weekly Edge show. Let's go ahead and take a look at what we're going to be covering today. As usual, I'll share with you how the markets closed for the week, what to be on the lookout for relative to support and resistance, and then also some of the headline news that drove price action last week, all with an eye toward helping you develop a plan for going forward. Also, viewer question of the week. And this week, it was all about how to handle many of these beaten down stocks that are beginning to bounce quite a bit higher. I will share with you an example first of a stock that has been really successful relative to reversing its downtrend. And then from there, three names that are on the cusp of reversing their downtrend. So let's go ahead and get started. Take a look at that news. First up, we did see small cap stocks reversing their downtrend this week, and I'll share a chart of that with you. It's all about a follow-on rally from the employment data that came out last week that suggested that the economy may not be slowing down, and that's good for these smaller companies. Also, news out from Canada that they did post a surprise interest rate hike, and that gave a bit of a pause to the markets as the concern was that that could also take place here in the U.S. Next week, of course, the Federal Reserve's meeting regarding their announcement of their interest rate policy will take place, as will the European banking system. So lots relative to interest rates, which of course are highly impactful to the broader markets. We did get news from China that their exports dropped 7% versus last year. This is not good for global growth. Also, weekly jobless claims came out on Thursday, and they did climb to a 2-year high. And this is good news in the sense that the Federal Reserve wants to see unemployment rise so that spending is reduced and then hence high inflation. Also, we did talk about that concept that the Federal Reserve will be meeting next week. Also next week is highly relevant inflation data. We're going to get the core consumer price index and producer price index for May next week. And that has in the past been highly impactful, both to the positive and the negative side. So all eyes there. Also, we will get May retail sales data as well. So let's take a look. Where did the markets close for the week? And here we are with the daily price chart of the S&P 500, a couple of areas you'll want to be aware of. And first up is the fact that we did retain a presence with the S&P 500. This is a daily chart above that 4,200 level. That had been an area of upside resistance that was being very closely watched. Since advancing above that, it now becomes support on any pullbacks. Next area of upside resistance, also widely viewed, is the 4,300 level, and we closed just below that at 4,299, and a close above that would be quite constructive. We also have the outside momentum indicators, RSI above 50, trending higher, also with the stochastics. And as we can see, given the momentum indicators and the uptrend taking place in the S&P 500, we are still in good standing there. Let's go ahead and take a look at the NASDAQ. You'll want to be aware of where that closed for the week. It actually was flat relative to the prior week, but you do also want to be aware of key resistance. And here we are with this particular index, 13200, and we did actually close the week above. I apologize, that should say above this resistance, which is good news. We also have outside momentum with that RSI and stochastics up here in positive territory. So the leading NASDAQ, the uptrend remains in place there. I mentioned to you small cap stocks. So let's take a look at the Russell 2000 and the price action that took place last week, because it was up 1.5%, much higher than the other indices. This is that rally that took place last week on those relatively strong employment data numbers, and you can see that the rally continued into this week. We can also see that the momentum is RSI positive, trending higher, likewise with the stochastics. And given the sharp advance that we've had over these past 6 trading days, I would anticipate a period of consolidation, but definitely this is an area where you can uncover stocks that are in the throes of reversing their downtrends. From here, let's go ahead and take a look at the underlying 11 sectors in the S&P 500. You want to be aware of where that relative outperformance is, and this is all about with helping you identify that, and then in turn you can participate in it. So first up here, I have a 2-month daily price chart view of the 11 sectors. I've sorted it by relative strength indicator and then in descending order. So up here in the forefront, we have consumer discretionary, technology, and communication services, and these are generally growth areas up here at the outperformance area. As we drill down to these underperformers, it's healthcare, utilities, and staples, and these are defensive areas of the market. So we are still seeing growth supporting the broader markets. And then also we are seeing movement beyond that with industrial sector. That was a top performer, up 1.4% this week, continuation rally as that move into cyclical stocks continues. Nice positive momentum characteristics for the industrials. Also, we did see financial stocks up a little more than 1%. Nice double bottom formation here. We're going to keep an eye on how it performs at that 200-day simple moving average. And then on the areas that are weaker, on the lookout for a potential downtrend reversal at some point in time. This is healthcare, and you can see that it was mostly stable for the week. It was flat, in line certainly with the NASDAQ, and keeping an eye on a potential reversal in those healthcare stocks. And here's a look at some underlying ETFs that are very helpful in getting your arms around, again, where that relative outperformance is not only taking place, but shaping up to continue to outperform. Up here at the forefront, we have that semiconductor ETF, SOXX, big move here on NVIDIA earnings. Nice orderly pullback to this 10-day simple moving average, remains in a very nice confirmed uptrend. And then we can also take a look at software stocks. They had a very sharp midweek pullback from which the group was able to recover. So we do have an uptrend within technology in the semiconductor and software stocks remaining in place. Now, down here in this lower quartile, I did want to point out 2 areas that are in the throes of reversing their downtrend. First up is the S&P Retail ETF, XRT. Take a look, a nice sharp rally last week, up 3.2%. You can see it's finding resistance at this 200-day, and I would anticipate certainly a period of consolidation. However, nice rally and downtrend reversal shaping up there. Also in financials, KRE, this is the regional banking ETF, also up 3%, has broken above each of these shorter term moving average. Nice volume characteristics, positive momentum shift there as well. So it is good to see a broadening out of the markets beyond those mega cap bang into other areas. From here, I will go ahead and share with you a stock. We talked about downtrend reversals, and this is a name that reversed about 5 weeks ago, and the name is Datadog, DDOG. It's a stock that I did put on my MEM Edge report after this gap up in earnings and rally. Once the stock broke above this 200-day simple moving average, we were able to take advantage of the advance beyond that. Now, a little bit choppy. This is last week's pullback in software and a recovery, but at the end of the day, this is the look that you are going to be on the lookout for as these stocks that have been beaten down are on the move, reversing their downtrends. So I talked about 3 other names that we can take a look at that are close to or already have begun to reverse their downtrend. This is Bill.com, a software stock. We had a gap up on earnings and then a period of consolidation. More recently, BILL has broken back above this 200-day simple moving average. We have nice upside momentum here taking shape as well. And with this resistance now behind it, on the lookout for the stock to continue to advance. This 10-day moving average up above that 200 is called a golden cross, and it is a secondary bullish condition. So from here, let's take a look at a semiconductor stock that is in the throes of reversing its downtrend. This is Qualcomm, QCOM, and we can see this advance that took place. It was a late mover relative to the NVIDIA and other AI-related plays, but we can see that today on Friday, Qualcomm closed above this 200-day simple moving average on very heavy volume, a nice 2.4% rally on positive news. We can see the momentum shift into positive territory here above 50, trending higher, and likewise with this MACD now above 50. Now for me, I will need to see the stock advance for at least 2 more days above this 200-day to convince me, but there certainly are characteristics in place to signal that Qualcomm could be on its way to reversing its downtrend. Another name we can take a look at here is in the biotech space. This is Biogen, and it is a stock that has pulled back to its 50-day simple moving average, and it did find support there. The rally in the stock this week has pushed it back above each of its 10 and 21-day moving average. Of interest to me is the fact that we are seeing the MACD black line up through the red, and oftentimes that signals the fact that this downtrend has now reversed. We can go back to this beginning March period. Similar characteristics signaled a new uptrend. Another last name to take a look at here is also in the throes of reversing a recent downtrend, and it's O'Reilly Automotive, ORLY. A little different than those down and out names, but the stock did pull back, close below its 50-day simple moving average, and from my work, we are still early as far as calling it a reversal. We will need to see 3 factors take shape in order to call this a downtrend reversal. We will use historical precedent as our guide. Back here, similar price action in the end of March. We had that MACD crossover. The price broke above those simple moving averages, and then we had the RSI turn positive, and you can see how that foretold a nice advance. So at this point in time, we have not yet seen that MACD crossover. The stock is still below this 50 and 21-day simple moving average, and we don't have that RSI yet in positive territory, but certainly firming up with the stock experiencing back and fill before potentially getting into a new uptrend. That's it for this week. Everyone have a great weekend. I'll look for you here again next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.